Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Last week, the ASX 200 set several new records, fueled by the US Fed cutting interest rates, stronger iron ore prices, and some solid labour force figures. It raises plenty of questions for investors, including what to do about the banks, which just seem to keep on keeping on, and the resources giants, which have really been a handbrake for much of the year. I wanted to take a broader look at the market and some of these issues for investors. Of course, the information in this episode is general in nature. It doesn't take into account anyone's personal circumstances. You should always do your own research and seek professional advice before making investment decisions. Lochlan Halloway is the equity market strategist at Morningstar. Lochlan, welcome to Fear and Greed.
Thanks for having me.
Lochlan, what do you say about the banks? They just keep on going. I noticed ANZ on Friday hit another multi-year high. NAB's at 17-year highs. Commonwealth Bank's been hitting a record. Can you keep investing in them?
Well, yeah, it's kind of the million-dollar question at the moment, and certainly a big puzzle for market commentators and analysts. What keeps pushing them up? On our assessment of their intrinsic value, they look expensive. We said that now for quite some time, but they continue to press higher. CBA is the outlier, I think, on our coverage list of the major banks. Only ANZ looks close to fair value. How you invest them now, I think it's probably hard to find a lot of value in those four majors. Some of the regionals we see as trading at a discount to their fair value, but they're not really what you probably expect as part of a core holding. So It makes things challenging, absolutely, but that's sort of the nature of the thing. I mean, what drives markets near term is sort of anyone's guess, but longer term we think valuations do matter, and it's a weighing machine and not a voting machine in the long run, I think, to borrow that phrase.
Okay. Tech companies, obviously much bigger question mark on Wall Street because we just don't have the size of the tech companies that many other overseas economies have. But we still have, WiseTech Global and REA, and some of these guys have done really, really well in recent times. I think the tech sub-index is the best of the ASX 200's 11. What do you think about tech stocks?
Yeah, again, I think some of those big names you mentioned, I think we see them fairly close to fair value. WiseTech being one, I think might be trading at a marginal discount. I mean, for the most part, a lot of these big names are high-quality companies. We give them a moat rating, which is part of our quality framework. So WiseTech and REA are examples of that. Again, they've had a really good year. And the sector, the way we see it, looks a little bit expensive. But once again, there are pockets throughout the sector that do look cheap. I think ASX would be one name that we think's probably been a bit oversold, and there looks like there's some value in that particular name.
Okay, let's move to the other end of the spectrum, at least in terms of performance recently. The resources companies, and I say that very, very generically because you have the big miners, Rio, BHP, Forestry Metals obviously hit by iron ore prices. You've had other commodity plays, and then you have the oil and gas guys. Woodside's had a shocker. I mean, start with the big three miners. It's all about China, but I mean, what are the prospects for them?
Yeah, look, I think that's another sort of challenging question at the moment for markets. I mean, I'm sure many of your listeners will be aware of the narrative over the last 2 decades, really. China has urbanized. It's had huge infrastructure spending packages, bridges, roads, residential construction, and that's pushed demand for our bulk commodity exports to very elevated levels for a very long time. But the question is, can that keep on going? And we're a little cautious on that outlook. We think the story around urbanization is mostly done. China's modernized its infrastructure, and on a per capita basis, it looks relatively similar to the West. It's got a shrinking population too. So a lot of those sort of tailwinds that drove the mining boom look like they might be fading, and that does pose a risk for that very large and important sector for our market.
Stay with me, Lochlan. We'll be back in a minute. My guest this morning is Lochlan Halloway, equity market strategist at Morningstar. I wouldn't mind jumping now between large and small caps because for a couple of years, all the small cap investors have been telling us now's the time to invest in small caps. Certainly, on a valuation basis, large caps are relatively expensive to small caps. What's your take on that, though?
Yeah, look, I think that's a fair characterization. I mean, the top 20, the ASX 20 at the moment, we see it trading, I think, about 15% overvalued on a market cap weighted basis, so fairly expensive on those grounds. We look a bit further down the list to the smaller end of the market, and they do look cheaper in general. There's pockets where it's more expensive and relatively cheaper, but I think that's a fair characterization that on at a sort of intrinsic basis, a fundamentals basis, the valuations of the top of the market as a general rule look extended, and that doesn't seem to be the case for the smaller names.
Okay, so where are the opportunities?
Yeah, so we see a couple of opportunities, and again, there's sort of pockets. Despite the fact that the market looks expensive, we do see pockets of value dotted around the place. One sector that I would call out in that sort of material space would be lithium. That's a sector that's been under quite a lot of pressure this year. A 90% peak to trough fall in the price of a commodity is a pretty big knock to weather, to put it mildly. So, yeah. That sector, though, we think we're starting to see the sort of supply side response that we would expect in such a low price environment. We're seeing curtailments, most recently in China at a higher cost lepidolite lithium mine, which should start to bring the market, in our view, more into balance. And lithium at the moment is trading at about $11,000 a ton, and we think a sort of long run price of around $20,000, which is based on our sort of marginal cost assumption, is achievable. And a lot of the lithium names on our list are trading at pretty steep discounts, reflecting where lithium market is at the moment now and where we think the lithium price will head.
And underlying that is that long term, there's still going to be plenty of demand for lithium.
That's exactly right. So you've got the demand story there. I think we all know that. It's EVs, it's the decarbonisation transition. And on the supply side, we've got the curtailments coming in now, which should take some of the supply out of the market and bring it more into balance. We had that huge undersupply condition in 2022, which pushed prices through the roof, and then that story unwound. Now it looks like we're sort of, as you say, this cautiously always, but perhaps approaching a floor as some of that supply is being brought out of the market. And in the sort of medium term, that should cause the market, we think, to rebalance.
What about some of the retailers and the consumer discretionary stocks?
Yeah, so it varies. I think we see as a general rule, it looks like that larger end of the cyclicals market probably is the evaluations there look a little bit extended. One thing that's positive though, and I'd say particularly more for the smaller end of the market, which was kind of thrown out with the concerns around the economic slowdown and the recession, that sort of the narrative of 12 months or so ago, is that we are seeing some green shoots for the consumer. The trading updates that came out of reporting season, look, largely speaking, I think we'd characterise them as pretty positive. Whether that's the early stage 3 tax cut coming through and starting to help the consumer, perhaps the worst of the monetary tightening is sort of behind us. It seems like there is a little bit of momentum coming into the consumer, and we do envision a better year in general for retail than last year.
Okay, and anything else within the industrial space worth a mention?
Yeah, look, one name that really impressed us in earnings season, which is one of our best ideas, is Brambles. That company had a really strong showing, and it's sort of long run. We were pretty optimistic on the name coming into reporting season, and it sort of beat our fairly positive expectations. So we still think it looks undervalued, and it seems like it's a pretty good story building there.
So Michael Thompson and I, my co-host in Fear and Greed, he always laughs at me because I've always loved Brambles ever since, it's probably 15 years ago. They actually lost 1 million pallets. They just They just disappeared. I thought it was a great story. How do you lose 1 million pallets? Anyway, They managed it. But what is it about Brambles? Because that must be very tied to the economic cycle, I'd imagine, with Brambles. It's just the fact that it's a packaging company. What is it that's particularly interesting about it?
Well, the thing we like about it, and it's sort of part of our framework of assessing companies, is its competitive advantages. We think it has a moat, cost advantage over its smaller competitors that had that first mover advantage and dominates its space in pallets. It looks like a higher quality company than its competitors, and as a general rule over the long term, that's what we think is a core valuation driver. So the moat is the part we really like about the name.
Lochlan, you are certainly one of my favourite people I've interviewed recently because someone else that likes Brambles. Thank you very much for talking to me this morning on Fear and Greed.
Thank you.
That was Morningstar Equity Market Strategist Lochlan Halloway. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.